Good morning. Welcome to Stock Market Today. It's Thursday, April 28th, 2020, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today, where you can sign up for a free email where you get a lot of the content for this show, as well as give you daily stock ideas. Hits your inbox every trading day before the market opened. So U.S. equities finished higher in Monday's trading, though off the best levels. Treasuries were weaker with the curve steepening. Dollar lagged on the yen cross, but was little changed against the euro. Gold was down 70 basis points, and WTI crude down nearly 25% after plunging 32% last week. Its biggest one-week decline in history, and it would appear that we're going to try to lap that this week. Because as we get to the desk this morning, S&P futures are up 1.2% after that rally yesterday. Asian markets were mixed overnight. European markets are higher. Treasuries are unched. The dollar is weaker on the major crosses. Gold is flat. WTI crude is down another 11.5%. So clearly the disconnect between the equity market and the real economy remains on display. That's not for us to debate. That just is, right? We follow price and pay attention to what's going on with price. If you're investing in equities, you got to be aware that equities are now detached from the economy. But okay, who cares, right? Follow the trends. So we are back into the resistance zone for the S&P 500, in that zone that we've been highlighting. Now we've been calling for 28 to 2,900 to the upside since April 7th. In our note, we said the break of 2650 to the upside opened the door to 2,800 to 2,900. So our roadmap is playing out. Initial support, should we break lower from here, 2750, then 2450 to 2600 below that. Resistance, we're in the zone right now, 2850 to 2930, 2930 being the 62% retracement of the entire move, right? So the Fed is here, just pumping liquidity into the punch bowl, right? We don't get caught up in that, right? Just it's a data point, your analysis. A lot of people like to, blame the Fed for the market going higher. Those are people who are caught short and stayed short and didn't adapt to the changing trend. Just factor it in. It's a data point, your analysis now, right? Supply, demand, right? There's a demand provider out there. We're leaving overbought in the near term. Chaikin money flow is bullish. Taking a look at our market in a minute now. What are we writing about in our note to Chaikin Analytics clients? Stocks rally to start the week with small caps leading the charge, right? It really was. It's kind of interesting to me. My note on Friday, I pointed out the bullish divergence between small caps relative to the S&P 500, and then small caps rally nearly 4% yesterday. We're seeing a lot of divergences in sector relatives, and they've caught our attention as it looks like cyclicals are showing signs of waning downside momentum. Throughout any kind of market shift where I see the potential for a change of leadership, I like to look for where leadership is emerging, and I'm seeing it in the blockchain theme. And I want to chat about it because I think it's important. Leadership in the bear market. Futures point to a higher open today, as I said. Look at the power bars now. The Dow up 1.4%, 5 to 12 bulls to bears. S&P 500 up a like amount, 63 bulls to 151 bears. So here's some of the subtleness and the shifts and the nuance. Nasdaq's actually been lagging in the near term here, right? Our large cap growth theme. And if you looked at my note on Friday, if you get my notes and you looked at my note on Friday, I showed you the bearish divergence between growth and value, right? Remember this call on Friday, growth value, bearish divergence. Not a signal to do something, a signal to wake up, take notice, say that trends could be changing. You better be paying attention. We're going to touch on some of them here. That also includes small caps. Bonds were down, sending yields higher. Financials, right? Another one of these cyclical groups that have been underperformers, up 3.5% yesterday, 2 to 10 bulls to bears there. Our stock of the day today is NetEase, NTES. It's in my note. Bullish, strong trend, strong industry group. Stock is oversold with middling to bullish money flow. So we have a bullish stock outperforming the market is oversold with bullish money flow as it trades in an uptrend. Notice the relative strength through the downturn, how this was leadership. Couple ways to play this one. Wait for the breakout. I like it here, personally. I think it's good. I think above 330 to 340, this stock is a stock that you want to be looking at on the long side of the portfolio, potentially taking it. I think it's compelling, right? We have a stock that's essentially oversold in an uptrend with bullet money flow. It's outperforming. NetEase looks compelling to me. Doesn't report for a couple of weeks. Taking a look at the sector tracker now, the movement in the major sectors over the last 5 days, kind of lining up with some of these themes we're talking about today. Again, a sit up and take notice. Energy, we've talked about it now for a few days, right? For the longest time, I was pounding the table saying energy was a disaster, energy was a disaster. And if you avoided energy, that helped your portfolio. If you took the bearish side, kudos to you. I'm happy I was able to help. But what's interesting to me now is that oil is cratering and energy is not going down. Energy stocks are not going down. I sit up and take notice. I sit up and take notice. It's not there for me yet. It may never get there. I argue, who cares? Energy is 3% of the S&P 500, so arguably, who cares? Except for, the smallest of small investors. But materials, discretionary, industrial is also at the top of the list. REITs, comms, fins, middle of the road. Here's your leaders, right? Potential shifts, right? Not playing out just yet. The trends are still up. The trends are still in favor of the names that we've liked and the sectors that we've liked. But there's definitely waning momentum. Now, it could just be a pause within the context of the trend or a potential shift. We wait for price to confirm. So it's something I'll be taking an eye on very, very, very closely over the days and weeks ahead. I think you should too. I think that you got to be doing your sector relative work every day. If you're not, I write about it once a week. I come here and talk about it. I think you got to be doing your sector relative work every single day. Our industry in focus, aerospace and defense, been a disaster over the past 6 months, lagging the S&P 500 by 21.43% as names like Boeing became essentially uninvestable. Power bar ratio, which measures future potential, is very weak, with more bearish stocks and bullish stocks. Group is currently ranked number 19 of 21 subsectors, having moved down 5 slots over the past week. 0 bulls, 9 bears, right? So we want to avoid names like Axon Enterprises, AAXN, Maxar Technologies, MAXR, and AeroVironment, AVAV. All of those stocks have very bearish Chaikin power gauge ratings, right? As we dig in to the ETF. Now, the ETF itself is neutral, but I personally don't ever just take the rating in isolation. Whether it's a stock, whether it's an ETF. The rating in isolation is interesting, but it doesn't give you the full picture, right? Because neutral and outperforming, I'm fine with. But neutral and underperforming, I have no interest. There's probably better opportunities out there, right? So the fund is oversold, but money flow is bearish, right? We're kind of chopping around here, right? Most markets are back up here near their long-term trend lines. XAR still chopping around down by the 21 day, right? Massive underperformance. I'm completely uninterested in this group. Maybe that'll change, but I don't go bottom fishing, right? I wait for trends to develop, right? I'm never going to be the person saying buy stocks on March 23rd. It's not my game. I wait for the evidence to support further upside and then try to game where that upside could be, which is why on April 7th, I was happy to write in my note to clients that the break of 2650 to the upside in the S&P 500 opens the door to 2800 to 2900. Folks, look where the futures are trading this morning. I'll give you a hint. It starts with 29. Yesterday's S&P 500 movers and shakers, our gainers and losers. Kohl's, KSS. A lot of these, not a lot of company-specific news here. It looks like kind of the reopen trade, if you will. Government, states talking about reopening their economy slowly in a staged manner, seeing how it plays out. So obviously these beaten down retail names were the hardest hit. So you're seeing a little bit of a snapback there. PVH rallies 15%. JW Nordstrom, just a disaster of a company, but up 13%. The Gap. I mean, last week I was reading articles about how the Gap might not have enough money to fund operations. Now the stock's up 13%. Definitely a sentiment-driven market, detached from fundamentals as far as I'm concerned. L Brands, but that's not my problem. We just follow the trends. L Brands, bearish rating, 11.5% to the good. Loser side of the board, FTI, nothing company specific. Likely oil related, down 4.25. Regeneron. Healthcare names came under a little bit of pressure yesterday. And I've come under a little relative pressure of late. Regeneron, nothing company specific yesterday, but stock caught a downgrade today. Still very bullish here at Chaikin Analytics. Actually, one of our best calls throughout the entire downturn. Abiomed downgraded today at Leerink Swan, or yesterday rather, at Leerink Swan, stock down 3%. Leerink has subsequently merged, I believe, with Silicon Valley Bank. Leerink's an interesting name though, because their specialty is healthcare, right? So they've merged with Silicon Valley, but Leerink known for healthcare. So when they make noise in a healthcare name, I tend to sit up and take notice. American Airlines, AAL, down 2.81%. Very bearish stock there. CTVA, no rating in that stock, down 2.7%. So let's dive into the sector relatives. One that's jumping out at me is discretionary. And yes, Amazon is a huge weight here. But I'm paying attention because number one, Amazon's reporting this week. And number two is if we are getting a reopening trade, we would expect to see some of these other retailers and discretionary type names catch a bid. So race discretionary relative to the S&P 500, retakes the 50-day, retakes broken support, retakes the 200-day. So that catches my attention. Would like to see more of an overbought reading. Haven't gotten there yet. So certainly not out of the woods, but definitely one of the trends that are changing out there, potentially changing, right? As downside momentum waned and we moved to the upside. Read my note today. I implore you to read my note today because the divergences on both sides, right? Bearish divergences for the leaders and bullish divergences for the laggers are really pronounced. You're starting to see it. Again, a sign to sit up and take notice, not necessarily take action, but I don't necessarily know if you'd want to be shorting energies and financials now. Right? That the trends could be stalling. We want to be paying attention though. Again, healthcare, one of our favorite groups, right? And the trend is still up, right? Don't get me wrong. This is what I'm talking about. The trend is still up here. We're looking at XLV relative to SPY, right? Breakout above the 200-day moving average, but notice how the highs last week were unconfirmed. You see this in tech, right? For the past 3 weeks, we've called it out in tech. Tech has continued to consolidate. What we would be looking for to confirm these divergences would be breakdowns from consolidations, right? Then you have to start unwinding, I think. You have to start taking off your positions if you're overweight these groups that are breaking down, right? If you're managing your risk with trailing stops, right, and your long tech names and your long healthcare names, you should notice, if we're in a breakdown, you'll notice your names start to get stopped out, is my view. So pay attention to the message of the market. The market's giving you a message every day, right? And the odds of what the market is pricing change minute to minute, day to day, right? You have to be paying attention to it every single day. I'll be watching these sector momentum shifts early, right? Remember, go back to the show from last week. We talked about materials, right? Showing a bullish divergence. Take a look. And then as always, I like to find emerging leadership, especially coming out of a downturn, if we are in fact coming out of a downturn. And this name jumped on my radar. This is an ETF, Amplified Transformational Data Sharing. It's essentially an active ETF that holds stocks that are involved in building businesses on or building out the blockchain. So this is kind of interesting to me because number one, the ETF rating is very bullish, right? Broken back above a key resistance level. Now we're going to wrestle with the 200-day moving average. We're overbought, but the relative breakout here on this downtrend line is what caught my attention. So again, the rating and relative strength. BLK is super interesting to me. If you want to drill down and look at some of their holdings, you can do that. I will tell you that the stock that I featured earlier, NetEase, is one of those holdings. So take a look at BLOK. Have a great day, folks.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.